Wait, did you hear? NVIDIA just overtook Apple and Microsoft to become the most valuable company in the world. And it's all thanks to AI. But here's the real question. Is there still room to run, or are we late to the party? In this video, I'll walk you through everything. NVIDIA's technology, revenue growth, China risks, U.S. politics, technicals, price targets, the whole playbook. So whether you're holding NVDA or just curious about the AI boom, grab your coffee, let's dive in. So first off, NVIDIA doesn't just sell gaming GPUs anymore. They've become the backbone of the global AI economy. In 2023, they made $27 billion in revenue. 2 years later, over $130 billion. That's a 5x leap. Insane. The magic? It's their AI chips, especially the H100 and the new Blackwell series. Twice the power, half the energy, and every AI data center wants them. These chips are going into massive supercomputers, like the one Saudi Arabia's building, the size of 20 football fields, just to run generative AI. And it doesn't stop there. Gaming? New RTX 5070, 5060 Blackwell GPUs start at $299. Enterprise AI, SAP, Siemens, and others are adopting NVIDIA's Omniverse and RTX Pro for simulations and digital twins. Smart vehicles and robotics? Their Drive and Isaac platforms are powering the next generation of automation. Bottom line, NVIDIA isn't just selling chips. They're selling the infrastructure of the AI era. It's like selling oil rigs during the birth of the auto industry. And that's just chapter 1. Next up, who's trying to take them down? And can they even come close? Sure, NVIDIA's on top right now, but they've definitely got competition knocking. Let's break it down by major players. AMD. Their MI300X chips are pretty powerful. Some benchmarks show them going toe-to-toe with NVIDIA's H100. But developers still prefer CUDA. It's like everyone's partying on one platform. Why move? Intel. Gaudi 3 is energy efficient, decent for inference. But let's be honest, Intel's still trying to catch up. Imagine showing up to the marathon when everyone else has already finished lap 3. Big tech, Google, Amazon, Meta, their TPU, Amazon's Trainium, and Meta's custom chips, all powerful, but mostly internal use, not major commercial threats yet. Huawei and China. Huawei's Ascend 910C is fast, efficient, and made for local AI demand, especially as the US ban blocks NVIDIA's top-tier chips from China. The challenge? Lack of a global software ecosystem and trust from enterprise clients. Other niche players, startups like Graphcore, Cerberus, and Sambanova, cool tech, but they're not mainstream threats yet. Bottom line, NVIDIA's strength isn't just the chip, it's the full stack. Hardware plus CUDA plus dev support equals network effect that's hard to copy. If you want to beat NVIDIA, you don't just build a better engine, you build a better highway system, and that takes time. So everything looks great, right? Skyrocketing revenue, unbeatable tech, competitors far behind. But there's a giant geopolitical elephant in the room, and it's called China. China used to be one of NVIDIA's largest data center customers, from cloud platforms to AI research institutes. But then the U.S. stepped in with export bans, first targeting the A100 and H100 chips. So NVIDIA made downgraded versions, A800 and H100, just for China. Problem is, late 2024, even those got banned. Now, NVIDIA built the H20 chip specifically to comply with the new rules and serve the Chinese market. But guess what? Chinese clients say, too slow, not worth the price. Result? NVIDIA lowered revenue guidance by $8 billion, all from lost China sales. Add to that dependency on Taiwan's TSMC for chip production. If tensions rise in the Taiwan Strait, the whole global chip supply could face major disruptions. Bottom line, China is both NVIDIA's biggest opportunity and biggest risk. It's a double-edged sword. Any US-China policy shift could drastically swing NVIDIA's stock overnight. If anyone other than Jensen Huang has the power to swing NVIDIA's stock, it's the US government. On the surface, it looks super supportive. The CHIPS Act pumped $52 billion in domestic semiconductor manufacturing, research grants, and tax breaks. But at the same time, the same government is tightening export controls, limiting sales of advanced GPUs to China, and even considering restrictions for allied nations. Double-edged policy. The upside. NVIDIA benefits from federal grants and subsidies. U.S. clients, military, government, universities are expanding GPU investments. Building domestic fabs helps reduce reliance on TSMC. The downside? Export bans shrink one of NVIDIA's top markets, China, forced to design separate chips just to comply with shifting policies. Political volatility, especially if administrations change. Bottom line, NVIDIA is playing political chess now, not just business. They get funding with one hand and a regulatory leash with the other. And remember, if Trump wins in 2025, he's hinted at even tougher foreign investment controls. All right, we've done our own deep analysis, but what do the pros on Wall Street think about NVIDIA right now? Answer? Most still rate it a buy or at least a hold, with pretty aggressive price targets. Goldman Sachs, rating buy. Target price $180. Reason, sees NVIDIA maintaining AI leadership for the next 12 months. Morgan Stanley, rating overweight. Target $187. Believes Blackwell chips will fuel another round of revenue acceleration. JP Morgan, target $200. Says AI cloud and data center demand still has massive runway. Bernstein, UBS, and Citi all say outperform, which means they expect NVDA to beat the market. A few cautious voices. Firms like Barclays and Wells Fargo warn about lofty valuation and potential overexpectation. Average one-year target, roughly $175 to $185 per share, depending on assumptions about AI demand and margins. Bottom line, Wall Street still loves NVIDIA, but knows it's priced for perfection. If reality ever falls short of the hype, short-term volatility is possible. So, optimism, but with caution. No matter how strong NVIDIA looks, it still plays within the rules of the global economy. Here are some key macro forces that could either push NVDA higher or drag it down in the next 12 months. Tailwinds. Number 1, Fed rate cuts. If the Fed cuts rates in 2025, growth stocks like NVIDIA tend to benefit. Lower borrowing costs equal higher valuations. Number 2, global AI investment. From Japan and Saudi Arabia to India and the EU, everyone's building AI infrastructure. NVIDIA wins from that wave. Number 3, tech fund flows rebounding. After a tech sell-off in early 2024, funds are rotating back, and NVDA is often their top pick. Headwinds. Number 1, global recession risk. If the world economy slows down, tech budgets get slashed fast. That's bad for NVIDIA's top line. Number 2, geopolitical risk. Any escalation in U.S.-China tensions, especially involving Taiwan or new chip bans, can disrupt supply and demand. Number 3, overheating stock price. If NVDA runs too hot too fast, it may face strong pullbacks due to profit-taking. Bottom line, global macro is the racetrack. NVIDIA may be the best car, but the road still matters. To wrap it up, NVIDIA is no longer just a GPU company. They're the digital infrastructure of the AI era, selling shovels in a gold rush, and the world's digging hard. They've got the tech, they've got the cash, and the competition still trying to catch up. But it's not risk-free. Things to watch out for: overheated stock price, U.S.-China tensions, global macro slowdown. Still, long-term, NVDA remains one of the most high-quality growth companies of our generation. If you like this video and want more deep dives like this on AMD, Apple, Tesla, or even top Asian stocks, don't forget to hit that subscribe button. I explain every story like a friend, easy to follow but packed with real insight. See you in the next video, and trust me, it'll be just as good as this one. Bye for now.